Hi everyone, this is Victor here. Welcome to the Intelligent Investor channel. Xpeng stock dropped as much as 64% from its peak on November 23rd last year to now. Now, just before making this video, Xpeng released its Q1 2021 earnings that show very strong vehicle delivery growth. Many people ask, is Xpeng stock undervalued now? Is Xpeng stock a buy? What are the risks and what are the long-term prospects? I'm going to answer these questions in this video and cover these topics. First, I'm going to talk about Xpeng's Q1 earnings review. Then I'm going to talk about Xpeng's 3 growth prospects. I will also talk about Xpeng's 4 major risks we should all consider. Then I'm going to talk about what is Xpeng stock's fair value per share. By the end of the video, I will talk about am I going to buy Xpeng stock. If you like this video, make sure to smash the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis videos a week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a supporter. You will be able to download the Intrinsic Value Calculator and see all the stocks I am currently buying, selling, and holding for the long term. The link is in the video description. Let's start. Now Xpeng had a very strong Q1 quarter with very strong EV delivery growth and improved gross margin. Here are some of the highlights. Xpeng's total revenues were up 616.1% compared with the same quarter last year and up 3.5% compared with last quarter. Xpeng's quarterly vehicle deliveries reached 13,340 in Q1, representing a 487.4% growth from the same quarter last year and a 2.9% growth from last quarter. This means Xpeng has delivered 38,110 vehicles in the last 4 quarters. In comparison, in the same Q1 quarter, NIO delivered 20,060 vehicles while Tesla delivered 184,800 vehicles. This means Xpeng is behind NIO and is far behind Tesla in quarterly vehicle delivery. The good thing is that Xpeng had a much improved gross margin. Gross margin was 11.2% in Q1 2021 compared with negative 4.8% for the same quarter last year and compared with 7.4% gross margin of last quarter. So this is a good sign to show Xpeng may eventually become profitable. Net loss was 786.6 million RMB in Q1. This is higher than the net loss of 649.8 million RMB in the same quarter last year. Diluted net loss per ADS share was 0.99 RMB per ADS share. Also, Xpeng had short-term cash and deposits of $5.12 billion US dollars, which is more than enough to cover Xpeng's short-term total liabilities of $1.38 billion US dollars. In terms of outlook, Xpeng expects to deliver between 15,500 and 16,000 vehicles in the second quarter this year, compared with 13,340 vehicles delivered in the first quarter this year. When it comes to investing, we have to be forward-looking and look at Xpeng's future growth. So let's talk about Xpeng's growth prospects first before we talk about Xpeng's risks. The first growth prospect is the increasing demand in electric vehicles in China. As of now, Xpeng earns around 95% of its total revenues from selling electric vehicles. Xpeng's current EVs include its G3 compact SUV and its flagship P7 sports sedan. The rest 5% revenues are from services including maintenance service, supercharging service, finance lease, and ride-hailing service. Now, China is planning to reach carbon neutral by 2060. According to this article here, China is planning to phase out selling conventional gasoline cars by 2035. 50% of all the new vehicles sold will need to be either electric, plug-in hybrid, or fuel cell power. The other 50% will be the traditional hybrids that will still use gasoline to run. Because China is pushing everyone to buy electric and hybrid vehicles, all the EV manufacturers in China, including Tesla, NIO, and Xpeng, are having very high EV delivery growth every quarter. So for example, Xpeng's total electric vehicle deliveries reached 5,147 units in April 2021, representing a 285.3% increase year over year. Since the Chinese government is providing a large amount of EV incentives and credits, as well as forcing everyone to start buying electric and hybrid vehicles, we can expect the largest EV manufacturers in China, including Tesla, BYD, NIO, and Xpeng, will continue to have high delivery growth for many quarters unless there is another economic recession. Here is another development that shows Xpeng may eventually reach 300,000 annual delivery in the future. With financial support from the Wuhan government, Xpeng will build a new manufacturing plant called Wuhan Base with an annual capacity of 100,000 vehicles. Xpeng currently has its self-owned Zhaoqing plant that has an annual capacity of 100,000 vehicles. Xpeng is also building another plant in Guangzhou with an annual capacity of 100,000 vehicles. So if we add all three plants together, Xpeng will have an annual capacity of 300,000 vehicles once both plants in Guangzhou and Wuhan are completed. In comparison, NIO is working with the Hefei government to create an EV industrial park called the NIO Park. The NIO Park will be around 12 times the size of Tesla's Fremont factory. It will have hundreds of EV-related businesses working there and have an annual production capacity of 1 million electric vehicles and 100 gigawatt hours battery. NIO will be one of the major partners in NIO Park. In terms of European expansion, Xpeng has started delivering its G3 compact SUVs to Norway. Now, according to CNBC, Xpeng has delivered more than 300 G3 SUVs to Norway. Xpeng is planning to start delivering its P7 sedan to Norway this year. All these recent developments suggest that Xpeng is aiming to deliver 300,000 vehicles a year if we add all three plants' annual capacity together. Here's a comparison. In the past 4 quarters between Q2 2020 and Q1 2021, Xpeng delivered 38,110 vehicles. This means Xpeng still has a long way to go to reach 300,000 vehicle deliveries a year. But Xpeng believes that the company has the potential to reach 300,000 vehicle deliveries a year. This is why they're building 2 new manufacturing plants in Guangzhou and Wuhan. The second growth prospect is Xpeng's increasing software revenue. According to the recent earnings call, Xpeng started earning revenues from its XPilot software in addition to vehicle sales. XPilot is Xpeng's autonomous driving tech. It's equivalent to Tesla's Autopilot and NIO's NIO-Pilot programs. Xpeng CEO said this in the recent earnings call. On January 26th, we began to push over-the-air updates for XPilot 3.0 to our customers and started to recognize revenues from XPilot software. As such, our vehicle revenues in the first quarter now includes software revenues for the first time in our history. I believe that Xpeng is the only Chinese automaker that has been able to charge full-stack self-operated autonomous driving software separately. Since mass deliveries of the P7 began in June 2020, we have delivered over 23,000 P7s as of March 31st. And on a cumulative basis, the attach rate of XPilot 3.0 has exceeded 20% as of March 31st. Such attach rate increased to approximately 25% in March 2021. I believe that XPilot software monetization will become a recurring revenue model and generate profits in addition to our sold vehicle. Going forward, building on our rapid technology innovations powered by all full-stack in-house R&D capabilities and hardware-software integration solutions, we will roll out XPilot 3.5 and XPilot 4.0, our next generation of autonomous driving technologies in the next few years. All this means that Xpeng's XPilot software sales will help improve Xpeng's gross margin going forward. So for example, Xpeng's gross margin was 11.2% in the first quarter of 2021 compared with the last quarter's 7.4% gross margin. Personally, I think selling software is very important for Xpeng because Xpeng will need to have a much higher gross margin going forward and of course much higher vehicle sales if Xpeng is to become profitable in the future. This is my opinion. If Xpeng can actually achieve 300,000 vehicle deliveries a year and continue to have improved gross margin by selling XPilot autonomous driving software, then Xpeng may eventually become profitable in the future, but I cannot predict when this will happen. Let's talk about the third growth catalyst, which should be Xpeng's upcoming P5 sedan with LiDAR technology. Right now, more and more consumers, especially in China, are buying electric vehicles with autonomous driving features. Autonomous driving will eventually become the norm, especially when level 4 and level 5 autonomous driving that does not need human drivers become much more established and safer. Xpeng's XPilot is not at level 5 autonomous driving yet, but as far as I know, Xpeng's XPilot 3.0 is likely at level 2 autonomy, which is similar to Tesla's current autopilot program. Also, Xpeng's current XPilot 3.0 advanced driver assistance system is one of Xpeng's biggest selling points and competitive advantage. As far as I know, Xpeng seems to be slightly ahead of NIO in the semi-autonomous driving tech. For example, Xpeng will start delivering its P5 smart sedan with LiDAR technology in Q4 this year. Xpeng's P5 sedan will be the first mass-produced production car in the world with LiDAR technology. NIO's upcoming ET7 sedan with LiDAR technology is expected to start delivering later in Q1 2022. Many people, including many car manufacturers, believe that LiDAR is much safer and more accurate in autonomous driving than Tesla's upcoming full self-driving FSD that's based on vision without using LiDAR. It's too early to tell which autonomous driving tech is much better and safer. We will know once Tesla releases its full self-driving FSD subscription service to the market this year, and once Xpeng also releases its P5 smart sedan with LiDAR later this year. Also, you may want to know this, Xpeng just showcased its future flying car in the recent 2021 Shanghai Automotive Exhibition. This is a revolutionary product. It's too early to tell whether Xpeng's flying car will become a successful product in the future. Let's talk about Xpeng's major risk we should consider. The first major risk is the current global chip shortage that is affecting all electric vehicle makers, including Xpeng, NIO, BYD, Tesla, and all other traditional car manufacturers. For example, both GM and Ford are expecting that their earnings will be much lower in 2021 because of the global chip shortage. According to the recent earnings call, Xpeng's management said Q2 will be the most challenging time, but they're hoping Q3 will be better, and if not, they expect that Q1 2022 will be much better. The second risk is that the EV market in China is very competitive with many large and smaller players. If you look at these top plug-in vehicle sales in China, you can see there are many car manufacturers in China making electric vehicles. Xpeng's biggest competitors include Tesla, NIO, Li Auto, BYD, SAIC, and all the traditional car manufacturers that are starting to make electric vehicles. Personally, I cannot predict whether Xpeng will remain at the top 10 years from now. The third risk is that Xpeng is still in the very early growth stage that is not making any profits yet. The company is still losing money every quarter. I consider Xpeng as a startup company with a very high revenue growth rate. To finance Xpeng's growth, Xpeng always needs to issue more shares, which will dilute existing shareholders. Because Xpeng's cash generated from selling electric vehicles is currently not enough to pay for all its expenses and its capital expenditures each quarter yet. This is expected for a fast-growing company that is still in the very early growth stage. For example, if you look at Xpeng's latest 2020 annual report, you can see its net cash used from operating activities were negative between 2018 and 2020. Xpeng had to raise a lot of cash by going IPO and by issuing more ADS shares afterward to finance its future growth. This is similar to Tesla in the beginning. We can expect Xpeng will continue to issue more ADS shares or issue more debts to finance its growth whenever the company cannot generate enough cash from selling enough vehicles. The fourth risk is that Xpeng's business will be impacted a lot if the inflation rate will be much higher later on. Whenever inflation rate is high, interest rates will need to increase. This means the borrowing cost for Xpeng will also need to increase. Growth companies like Xpeng that do not generate consistent free cash flows yet will be impacted the most whenever there's high inflation rate. Growth stocks generally perform very well when interest rates are very low, but growth stocks are always impacted the most whenever interest rates such as the US 10-year Treasury yield increase too quickly. Now let's talk about Xpeng's fair value per share. Using a discounted cash flow DCF model to estimate Xpeng's fair interest value will not work because Xpeng is still losing money every quarter and has not generated consistent cash flows yet. Using a DCF model to estimate Xpeng's fair interest value only works if Xpeng has started generating consistent cash flows each quarter. One of the best ways to estimate Xpeng's fair interest value is to find a reasonable sales multiple from a comparable company. In this case, I'm going to use Tesla as the comparable company. We are assuming Xpeng will eventually become a profitable company in the future, but we do not know when this will happen. So let's look at this intrinsic value calculator spreadsheet here. Now, if you want this intrinsic value calculator, you can download it in my Patreon blog. You can find the link in the video description. If you look at this intrinsic value calculator here, all this data is from Morningstar as of May 14, 2021. In the past 12 months, Xpeng's total revenue was 8.38 billion RMB. So after I convert this to US dollars, Xpeng's total revenue in the past 12 months was 1.3 billion US dollars. According to Morningstar, Tesla's 5-year average price to sales multiple was 7, and Tesla's current price to sales multiple is 18.34 as of May 14, 2021. Under the worst case scenario, we're going to use Tesla's 5-year average price to sales multiple. If we multiply Xpeng's 1.3 billion US dollars total revenue by Tesla's 5-year average price to sales multiple 7, then Xpeng's fair value as a whole company should be around 9.11 billion. Personally, I think this is too low, but let's look at the best case scenario. Under the best case scenario, we're using Tesla's current price to sales multiple 18.34, and if we multiply this by Xpeng's total revenue of 1.3 billion US dollars, then Xpeng's fair value as a whole company should be 23.88 billion or $29.75 per share. So if we average out both case scenarios, then Xpeng's fair value as a whole company should be around 16.49 billion or $20.55 per share. This is compared to Xpeng's current 20.62 billion US dollars market cap and Xpeng's $25.7 per share as of May 14, 2021. Personally, I like to be very conservative in my estimates. If you have to ask me, I believe Xpeng's fair value as a whole company is around 16.49 billion or $20.55 per share. It's very hard to estimate Xpeng's fair interest value because Xpeng doesn't have consistent cash flows yet. So am I buying Xpeng stock? No, I am not buying Xpeng stock right now, and I do not have any positions in it. Personally, I like Xpeng's innovations and its products a lot, especially its upcoming P5 sedan with LiDAR technology and its current P7 sports sedan with the Xpilot 3.0 advanced driver's assistance system. But when it comes to financial, I believe Xpeng is still quite far away from being profitable. Now, I cannot predict when Xpeng will start becoming profitable each quarter. Xpeng may need to deliver as many as 300,000 vehicles a year before it can have consistent profit each quarter. I cannot predict when this will happen, so this is one of the main reasons I am not buying Xpeng stock. If we're using Tesla's current and 5-year average sales multiple to estimate Xpeng's fair interest value, I believe Xpeng's fair interest value is around 16.49 billion as a whole company or $20.55 per share. Again, I'm usually very conservative in my estimates. Now, all these estimates are only my opinions and my analysis based on my research. Make sure to always do your research and do your extra due diligence first. Now, if you like this video, make sure to smash the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a supporter. You'll be able to download the intrinsic value calculator and see all the stocks I am currently buying, selling, and holding for the long term. The link is in the video description. Thank you for watching. This is Victor from the Intelligent Investor channel, and I will see you in my next video.